let's get to the stock of the day, because I think some of these themes will continue to come up. And the stock of the day is James Hardie. It has forecast first quarter sales and earnings above previous guidance after stronger than expected demand for its siding products. The building products maker now expects net sales of almost $1.5 billion US for the 3 months to the end of June. Adjusted earnings forecast at between $399 to $407 million US. Its chief executive, Aaron Erter, said the performance reflects market share gains and execution, rather than any meaningful recovery in the US housing market. Shares are responding positively to that update coming through today, in fact, up by close to 7%. So I'm just going to start on the news from today, Mark. Really interesting commentary about it not being related to the US housing market.
They're the go-to in that fibre cement. So, and the US housing market's pretty horrible at the moment. And rates are quite high. And obviously, the way that they've got their mortgage market structured is, you lock in a rate, It's not like here where it's variable. So, if you're 10 years into your mortgage, it's tied to your house. Refinancing is an expensive exercise, particularly if they're looking at hiking rates over there. Yields continue to be, a lot higher. So, and these guys, you always want a company that in a down cycle can make leaps forward like this. So, because that means, that sort of shows on the surface that they're decent quality. And they're obviously cycles will turn at some juncture, and then they're still going to be in the best position, to take advantage of that cycle uplift. And they've said organic growth is fairly soft, but it's really nice positive announcement, I think, this morning, and shows, because James Hardie was a bit patchy at periods.
Well, so would you buy, hold, or sell it today?
I'd probably just hold today. It's not, you can't ignore the underlying, but it makes me, today's announcement and just general rhetoric makes me more inclined to buy it once we see the cycle turning and we go back into more of these cyclicals that are exposed to the housing market, particularly in the US. So definitely come a lot higher up on the watch list in terms of tendency to buy, because I like what management's saying. But it's up 7%. It's not a stock that rockets necessarily. So I think you'll have some time.
Got it. So Howard, so it's a cyclical company. We know that. Is it quality, though, when you've got management that made such a big acquisition without getting approval from Australian shareholders?
Well, that's only one of its past problems. Indiscretions. Why would you invest your money with management and a board that actually treats you badly? And that's basically what James Hardie did. And, we in Teaminvest look at management and boards from a point of view of we'd like them to regard us as their partners. After all, we put the money in the company that allows them to have jobs and do the things that they do. And if they're going to treat us badly, why would we want to put our money in there? It's not as if there are no other choices in the world. It's not as if you can only invest in one or two companies and then none others. There are 6,000 in the US, a couple of thousand here, about 45,000 worldwide. You can certainly be fussy about who your partners are. So when we look at James Hardie, I don't think anybody in Teaminvest would say anything other than yuck. That's our view. By the way, an extra thing with the announcements, and it just shows what I mean by yuck. The last couple of times they reported, they said their results were down because of destocking. When their results now went up, they didn't say it's because of a restocking. So they use the excuse of how much stock their customers carry when it suits them, and when results go up, they pat themselves on the back and say how clever they are.
Okay, good. All right, so because our guests disagree, that's a sell from Howard in case you couldn't tell. Morgan's has a trim, Citi a buy, Macquarie overweight, Morgan Stanley overweight, and Ords and UBS. Old ratings, though, hold in neutral. So today we've heard from Citi, still kept its buy rating. Morgan's is trimming.